Stocks poised for substantial growth in 2026?
Indeed. According to Samuel O'Brien, the aerospace and defense sector experienced significant growth in 2025 due to geopolitical unrest and increased government defense spending. This trend suggests continued potential for specific stocks in 2026.
Which companies stand to benefit the most from this evolving landscape?
O'Brien highlights Huntington Ingalls, emphasizing its role in supplying ships to the U.S. Navy and its potential growth in autonomous sea technology. He also points to BAE Systems, a UK-based defense and IT security leader, as a beneficiary of Europe's move towards military independence. Rheinmetall, a German arms manufacturer, is also well positioned in this shift.
What about US based companies? Are there any attractive options despite the volatility?
Lockheed Martin remains a stalwart in the U.S. defense sector, potentially undervalued despite recent volatility. BWX Technologies, with its involvement in both defense and nuclear energy, offers exposure to multiple high-growth areas. The increasing demand in both military and civilian sectors positions it as an interesting opportunity. These picks reflect a broader trend of adapting to decentralized deterrence and policy uncertainty, making them potentially strong performers in the coming year.
Thank you for sharing these insights. So, today we're diving into the performance of tech stocks, particularly focusing on AI investments.
Thanks for having me. Mohit Oberoi's analysis points to an interesting shift in the market. While the broader markets continue to deliver solid returns, the magnificent 7-foot stocks have shown varied performance, with some investors growing wary of the ever-increasing AI capital expenditure.
What can you tell us about the performance of Alphabet compared to other tech companies?
Alphabet has notably outperformed many of its peers within the Magnificent Seven. Its significant rise has somewhat masked the group's overall performance, which otherwise would have trailed the Nasdaq Composite Index. This suggests a more tempered investor sentiment towards AI investments across the board.
The article also mentions Apple. What is its AI strategy, and how is it perceived by the market?
Apple seems to be walking a fine line. The market is not rewarding companies that are underinvesting in AI. While Apple has been gradually integrating AI features and reallocating resources, there's a perception that they might be lagging behind, even as they explore potential acquisitions to boost their AI capabilities.
Any closing thoughts on the future of AI investments?
It appears that the market is becoming more discerning. Companies need to demonstrate a clear and sustainable path to profitability with their AI ventures, and simply throwing money at AI is no longer sufficient to excite investors.
Thank you for those insights.